Are you tired of feeling stuck paying rent but think you can't buy a home because you don't have a perfect credit score or a huge down payment? What if I told you there's a loan program that could get you into a home with just 3.5% down and a credit score as low as 580? Hey everyone, I'm Heidi, and today we're going to cut through all of the myths and misconceptions about FHA loans. By the end of this video, you'll know exactly if this program could be your ticket to home ownership in 2025 or if you should look at other options. Now, I've helped hundreds of buyers navigate the home buying process. And here's the thing, FHA loans get a bad rap, but they're actually an incredible tool for the right buyer. Let me show you why. First, let's break down what an FHA loan actually is. It's a government-backed mortgage that's been around since 1934. The government isn't actually lending you money, private lenders do that. Instead, the Federal Housing Administration insures the loan, which lets lenders offer more flexible terms. In 2025, here are the main FHA loan requirements. Credit score minimum of 580 with 3.5% down or a 500 with 10% down. The property must be your primary residence, 2 years of steady employment, generally the same line of work. Debt to income ratio typically can't exceed 43%, though some exceptions go to 50%, and you must have a valid Social Security number and lawful residency. But here's what most YouTube videos won't tell you. There are some real drawbacks to FHA loans you need to understand. First, let's talk about mortgage insurance. It's actually a double hit with FHA loans. You'll pay both an upfront premium and monthly mortgage insurance. The upfront premium is 1.75% of your loan amount. On a $300,000 home with 3.5% down, your loan amount would be about $289,500. That means you're paying an upfront premium of just over $5,000. Now, most people roll this into their loan, which means you're actually borrowing $294,565 and paying interest on that insurance premium for 30 years. Then there's the monthly mortgage insurance. With FHA, you'll pay around 0.55% to 0.75% on your loan amount annually divided into monthly payments. So on our $300,000 home example, that's between $133 and $188 added to your monthly payment. And here's the kicker. Unlike conventional loans, FHA mortgage insurance is typically permanent unless you put down 10%. Even then, you'll still pay it for 11 years. The appraisal process is much more intensive. FHA appraisers aren't just looking at value, they're also doing a health and safety inspection. See, when you get an FHA loan, you're not just getting an appraisal, you're getting what I call a property physical. The FHA appraiser is basically playing the role of both value expert and home inspector. First, they're obsessed with paint, and I mean obsessed. If your dream home was built before 1978 and has any peeling paint or chipping paint, even just a small area on the garage, that's a red flag. Why? Lead paint concerns. And it's not just about interior walls. They're checking everything from windowsills to exterior trim. The roof is another big one. FHA requires that the roof has at least 2 years of life left. The appraiser might call for a professional roof inspection, and if that inspection doesn't go well, you're looking at requiring a new roof before closing. And if they find these issues, the seller must fix them before you can close, or you'll need to walk away. This is why buying a fixer-upper with a standard FHA loan is basically impossible. Unless you're using an FHA 203K renovation loan, which is a whole other conversation, any property with significant deferred maintenance is probably off the table. And those trendy as-is properties you see listed at great prices, usually not going to work with FHA. Before we dive deeper into who these loans are actually perfect for, I want to offer you something valuable. I've created the ultimate guide to home buying that walks you through exactly how to choose the right loan program. Click the link in the description below to download it. Third, FHA has lower loan limits than conventional loans. In 2025, here in Phoenix, the loan limit is $546,250, while conventional loans go up to over $806,000. In high-cost areas, this difference can be even more significant. So while here in Phoenix, that $550,000 loan limit is well above our median home price of $455,000, this may not be the case in some areas. All right, now this is a big one. Sellers often get nervous when they see an FHA offer coming in. Now, this wasn't as big of an issue in past years, but in today's market, it can really impact your chances of getting your offer accepted. Now, let me explain why. When a seller sees an FHA offer, They're often thinking about all the extra hoops they might have to jump through. But here's the thing, if you get an FHA appraisal and something comes up, that appraisal sticks with the property for 120 days. That means if your deal falls through, the next FHA buyer can't get a new appraisal. They're stuck with the same one. And if that appraisal found issues, the seller has to disclose them to future buyers. But it gets even trickier. Let's say you're in a multiple offer situation, which is common in some markets still. The seller has two offers, yours with FHA financing and another with conventional financing. Even if your offer is the same price, many sellers will lean toward the conventional offer. Why? Because they're worried about what I call the FHA domino effect. It goes like this. The FHA appraisal comes in, finds some peeling paint or a loose handrail, and suddenly the seller has to fix these issues before closing. Not only does this cost them money, but it also delays closing. And in real estate, time is literally money, especially if they're trying to buy another home themselves. There's also the unfortunate perception, and I want to be clear, it's often unfair, that FHA buyers are less qualified or more likely to have their financing fall through. Some listing agents even counsel their sellers to avoid FHA offers altogether, especially in competitive markets. Now, I've closed countless FHA loans with rock solid buyers, but this perception is something you need to be aware of when making offers. Now, here's where FHA loans really shine in 2025's housing market. Interest rates. FHA loans typically offer lower rates than conventional loans. In today's high rate market, that difference could save you hundreds each month. And credit flexibility. While conventional loans might require a 620 or higher, FHA can work with scores as low as 580. They're also more forgiving about past credit issues. And the down payment, that 3.5% down payment is real. On a $300,000 home, that's $10,500 compared to $60,000 for a traditional 20% down payment. And unlike some loans, FHA lets you use gifted money for your entire down payment. So who are FHA loans perfect for? First-time buyers with limited savings, buyers with credit scores between 580 and 680, those who've had past credit issues but have recovered, and buyers in markets where home prices are within the FHA limits. But let me be clear, FHA isn't always the best choice. If you have a credit score above 700 and can put 10 to 20% down, a conventional loan might save you money long term. So download my ultimate guide to home buying to see a complete comparison and figure out which loan is right for you. The truth about FHA loans, they're not perfect, but they've helped millions of Americans become homeowners who might otherwise still be renting. The key is understanding if they're right for your situation. And if you want to learn more about whether 2025 is your year to buy a home, check out my video right here about timing the market versus time in the market. See you in the next video.